Alright, let's talk about what actually happens to the markets when the US government shuts down. Now, I know the headlines always sound dramatic. Government shutdown, markets in turmoil. But let's break down what really goes on. First up, the stock market. Whenever there's talk of a shutdown, you'll usually see a little dip in stocks. Why? Because investors hate uncertainty. It's like when you're waiting for someone to text you back. You start imagining the worst. But here's the thing. History shows that these dips are usually short-lived. Look at 2013, 2018, 2019. The S&P 500 bounced back once the government reopened, as long as the broader economy was still solid. Now, not all sectors are hit the same. Defense contractors, aerospace companies. Companies with big government contracts might feel some pressure because payments get delayed. And if you're a federal worker or a contractor, a missed paycheck can mean cutting back on spending, which can ripple into consumer sectors. Plus, if a shutdown happens close to a debt ceiling debate, Wall Street gets even more nervous. That's when you see real volatility. On to bonds and interest rates. Oddly enough, treasuries, those government bonds, often become more popular during a shutdown. Investors see them as a safe haven, even though, yes, it's the government that's having funding issues. But if the shutdown drags on, and it looks like the US might actually miss a payment, yields can spike. That's when things get dicey. What about the dollar? Sometimes it weakens if people think the shutdown means deeper problems. But weirdly, in a global crisis, the dollar can actually strengthen just because it's still the world's reserve currency. And here's something a lot of people miss. When the government shuts down, a lot of economic data just doesn't get released. No jobs report, no inflation numbers. That leaves traders flying blind. And markets hate that. Bottom line, government shutdowns bring short-term market jitters. But unless they're tied to something bigger, like a debt default, they usually don't lead to lasting damage. So next time you see those scary headlines, take a breath. History says the markets can handle it.